This content is for informational purposes only and should not be taken for financial or legal advice. Always speak with a licensed professional before making mortgage or financial decisions. Now on to the show.
Hey guys, welcome to the channel. My name's Michael, and this is your go-to hub for financial Canadian news, real estate insights, mortgage tips, and entrepreneurial wisdom. I'll break down the info you need to build a smarter financial future in Canada. So go ahead, hit the subscribe button, and let's navigate this landscape together. Guys, we're halfway through 2025, and I thought now would be a great time to go through this incredible document that CMHC has put out. It's the 2025 CMHC Mortgage Consumer Survey, chock full of information, not only for mortgage agents and other real estate professionals, but I actually think there's a ton of insights here for investors, first-time homebuyers, and even refinanciers. For those of you who don't know, CMHC stands for the Canadian Mortgage and Housing Corporation. It is a federal crown corporation. You'll usually hear about CMHC when it comes to default insurance. When you're putting less than 20% down on a home, they provide this default insurance. In this case, they also do a ton of research. The alternatives to CMHC is, of course, Sagen and Canada Guarantee, which are actually privately owned. Now, CMHC conducts this survey chock full of good information. I think we're going to be doing a video series on this. The title for this video is The State of Canadian Home Buying. Are Canadians buying homes in 2025? The answer might surprise you. Since 1999, they've been conducting this survey. I'm interested to know how comprehensive it was back then, because what you'll see right away is this year, a total of 3,968 mortgage consumers were surveyed between January 2nd and the 24th in 2025. Nearly 4,000 mortgage consumers were interviewed. An incredible study. And I implore you, after this video is done, to maybe check it out for yourself. Now, as you can see, these are people who are over 18, and they're the prime decision maker in their household, also undertaken a mortgage in the last 18 months. And later on, we're going to be seeing a pretty chilling statistic they found showing that 74% of Canadians believe home values will continue to rise in the next 12 months. You can't help but think that if you are invested in this asset class, you would be optimistic of prices increasing. Otherwise, why would you be invested in it? So take that with a grain of salt, but still 74%, a very high percentage. So CMHC was kind enough to break this down for us. So we have 17% of people were home buyers, 12% of people were first-time home buyers, and 5% of people were repeat buyers. I would imagine that this is supposed to be interpreted as 34% of people were home buyers this year. 12% of people of that 34% were first-time buyers, and 5 being repeat buyers. 65% of people were renewers, and 18% were refinanciers. It's good to have that breakdown so you can see what the Canadian landscape looks like. So one thing I want to highlight here is that 12% of people were first-time homebuyers, up from 10. So first-time homebuyers are actually increasing across Canada. The landscape across Canada is very broad, and you can see that with the breakdown saying 15% of these numbers were from Ontario. So the other thing that's interesting is that renewals are trending up from 58% in 2023, 62 in 2024, and 65 in 2025. So it is still increasing. So I think this is really important for those first-time homebuyers out there. Although 35% of first-time homebuyers stated they lived with friends or family prior to their first home, 64% were renting. They rented for an average of 6.3 years prior to purchasing a home. 6.5 years of renting. I know the first-time homebuyer is probably around 36. I think that's an Ontario number, could be Canada-wide. Purchasing a home after 6.5 years of renting, that's not that bad. I think that's a pretty fair number. I think it's great that those people are saving up. So if you're in a mental state where you feel like you can't catch up, just know that most people take 6.5 years to purchase their first home from renting. And if you're living with your friends and family, I think that's great. You're able to save up even faster. Hopefully you can accelerate that process. Now, some people pay rent to their friends and family. Again, I think that's fine. As long as you're accumulating that wealth to get in a down payment, I think you're on the right track. Now, even here you can see that both for 2024 and 25, 5 years or less. That's what most people are in that category for. So they are really saving up a down payment here. This is not what I expected. I thought people would be majority in the 6 to 10 year range. So this is really enlightening for me even. that people are so quickly getting a down payment in, even while renting. Now, this is one of those things that you have to share with your friends and family. If you love your friends and family, you will share this because it is so important. It's the same as a TFSA. Everybody should know about this. It's an FHSA, a first home savings account. So important. This was prevalent among 80% of first-time home buyers. Of those, 71% had participated in the program. 71% of first-time home buyers have an FHSA account. If you don't have an FHSA account and you want to be a first-time buyer, you are in that 30% bracket. Get in the 71%. It's way easier. It's a great tool to get a home. So here's a really important number. 74% of people believe that the value of their home will increase over the next 12 months. I'm not certain that we'll see that much growth at the end of the year. These people are going to be skewed because, of course, you want your investments to grow. Being optimistic about that isn't a bad thing, but preparing for the worst is very important. Now, this is also interesting. 74% are confident they got the best mortgage deal for their needs. That's a really high number. I'd like it to be higher. The 26% who weren't very confident, I don't think they got the worst mortgage deal. They just probably went into their branch for their bank. They had all the information there. They kind of just took whatever the bank offered, and then they got home, had the house party. People were congratulating them, and they started hearing different rates that other people got. This is why it's so important to talk to an independent mortgage agent. I have 50 lenders to go talk to, so I can get you a very competitive rate. These banks have one line of products, maybe 2, 3, depending on your financial situation, and they're just gonna give you what they have. You can maybe play ball with them, get that number down. I have seen that, but at the end of the day, I doubt it's going to be the best mortgage for you. They're just not as flexible. Now, this is something that I think could be deceptive. 73% of people are generally comfortable with their current level of mortgage debt. I would guess in that 73%, maybe another 20% are like comfortable. So the number on this page that I kind of want to focus on is the worried house prices would increase. 34% of people had FOMO in Canada, and I don't blame them. I think it's better to be on this train than off of it. I think especially if you can manage a mortgage, you know that payment's good for you. You have a secure job. You know you're going to chip away at that mortgage, maybe even accelerate the payment. Great. So I had just done a video on this. 22% of people refinanced their home because they wanted to reconcile debts. This is debt consolidation. And rather than paying 50, 100, I've heard numbers as high as $150,000, $200,000 in bad debt for auto loans, personal lines of credit, credit cards. Rather than paying that extremely high interest rate, it can be a much better opportunity to transfer that into a mortgage at a really low rate that you can chip away at and even accelerate those payments from the difference, because you might be saving $1,000 or more just in interest payments. So this can be a great tool, and it's great to see that 22% of people utilized it. So this is the part that's exciting to me. In this digital landscape, people are doing the research, which I think is great. So right away, you can see 77% of mortgage consumers conducted research online. 44% of those people went to lender websites. 26 went to real estate listing sites. 38 mortgage broker websites, 38 interest rate comparison sites, 25% CMHC website. So this is kind of tough because you can go to these lender sites and look at the rates themselves. It's always better to talk to someone. When you're talking to an independent mortgage agent, as an example, I'm going to give you the best rate on the block for your financial situation. So it's great to see that a third of people were going to YouTube and Facebook to learn about the terminology, the rates, the current financial market, all these things, so that they're educated buyers going into the situation. And that's what I'm trying to do. I'm trying to educate people for their financial future so that they make these good decisions for themselves and their family. Usually first-time homebuyers and refinanciers. So these are people making huge financial decisions in their life. And yes, it's great that they're looking online. It's important to know who you're following and that they have their best interest out for you. If you're following an influencer who's driving around in a Maserati and telling you now's the best time to buy, I'm not sure that's going to be the best advice you can get. But it's great that you're doing research nonetheless. So now this can kind of lead to a tricky spot. So it's saying that 72% versus 50% of repeat buyers completed an online financial self-assessment. These self-assessments, pre-qualification, pre-approval, whatever you want to call them, are very simple. I often have people call me or walk into my office and say, hey, the bank offered me this much at this rate. What do you got? Now, the first thing I say is, great, let's get some information from you and we can calculate that for you so that you know what you can shop for. And sometimes I'll hear back from them saying, well, the bank didn't need any of that. Now, if it's your personal bank, they probably have a lot of your information. Hopefully they're using it. But sometimes online, these pre-qualification or pre-approvals are based on very little. So you don't actually know what you're pre-qualified for. Now, when you sit down with me, we get a full financial picture of you and we can build a file. And I can tell you with a pretty high confidence level of what you're actually going to be able to qualify for. And that gives you the right tool to go shop. But when I see people come in with these pre-qualifications and they haven't given them any information, I think you might be starting your home buying journey out on a really rough note, because you might be surprised what you actually get approved for once you have an offer in on the home. So please, the more information you give your mortgage agent or broker, the better. You're going to get a more accurate picture of what you can actually afford. Now, this is kind of interesting. 85% of people compared interest rates. If you're talking to an independent mortgage agent, you don't even need to worry about it. I compare those rates for you. I have 50 different lenders with many products that I can see on my portal. I know what the best rate out there is for you, and I love helping people search for that and find it. You might miss a product line or a provider doing your own research. I think it's great to look, but without a doubt, there is a chance you might miss something without talking to a professional. Now, I love seeing this. More consumers were contacting mortgage professionals, up from 60% to 70% from 2024 to 2025. They also contacted a greater number of lenders or brokers. You want to get the best rate out there. If you find someone trusted, and you really won't have to waste time shopping around, but it's always good to know your options. You really don't want to contact the lenders. You want to contact the brokers. We have a lot of pull. We have a lot of leeway, maybe going to a different lender based on your financial picture that you may not even have heard of. So as we saw before, the proportion of first-time home buyers actually went up from 10 to 12%. So on average, people have to save for 3.4 years for their down payment. This is down from 4.2 in 2024. That, I think, is fantastic news. Less down payment, easier to get in the market. I like it. Now, guys, here's the troubling part. Gifts or inheritance remain a big component of the down payment, 35% for home buyers, and the average gift was $79,127. $80,000 was gifted or given as an inheritance. Now, they go on to say, however, it was not the sole reason that they were able to buy a home. In fact, 78% would have still been able to purchase their home, but with some concessions. This is up from 65%. Looking specifically at first-time home buyers, 41% used funds from their gift or an inheritance to purchase their home, and the average gift amount was $74,570. What we can deduce from this is that it probably bumped them up from being under 20% to being at or over 20% down payment. This would allow you to circumnavigate the default insurance, which is maybe what I think this is trying to do, but I am having a hard time digesting that $75,000 were gifted to these first-time home buyers, and 80% of them are saying there would have just been some concessions. What kind of concessions? Now, I want to know if that concession usually is that they would put less than 20% down and have to pay that default mortgage insurance, or they just would have got a smaller home. I'm sure it's a combination. I hope that they're putting more than 20% down to avoid that default insurance, but I have a funny feeling that maybe we are incentivizing higher home prices with these gifts. I think it's great that people got financial support, but there's a lot of people out there who aren't going to be getting $75,000 as a gift. So if you're one of those people who aren't going to quite get $75,000 as a gift, reach out to me. Also, $75,000 already sounds very high, but most people I think would be getting a range between $25,000, that's a very generous gift. I've seen as low as $10,000 for a down payment gift. Very generous. So that means that some people are probably reaching that 100K or more. That's a lot of support. So this is one of the most troubling things I've seen on this document. If you take a look over at the first time homebuyer infograph, you'll see numbers like 52% came from savings. That's really good. 22% came from gift or inheritance. That's very generous. I like it. 17% came from a loan. I don't want to beat these people up because they wanted a home and they're already probably feeling the pressure right now, but it's probably not your first option to get a loan for your down payment. I know you probably heard that out there. I don't like it. I personally want to see that number as low as possible, 1%. I also find it interesting that the repeat buyer only has 4%. Repeat buyers seem to be, I think, avoiding this. That's a very small number. That is a quarter of the number found in first-time home buyers. Now, this is another worrying number for me. The average price paid. More home buyers paid the maximum price they could afford than in the previous 2 years. So something that's very important to consider when looking at any Canadian statistic. The graph that says paid the maximum price in the last 2 years, 46% to 58%. That is trending upward. There's a little footnote on the bottom of this graph. Let's take a look-see. Home buyers were more likely to pay the maximum price in British Columbia, 66%, and Ontario, 64%. Those are 2021 numbers. So even though the rest of the country, as an average, is paying around 58% of their maximum price, in populated areas like BC and Ontario, we're still at that 65% range. So sometimes these numbers can be a little skewed. And what's great about CMHC, and I applaud them for this, is putting that text at the bottom there. Super important. So this is something that kind of came out of left field for me. 1/5 of home buyers, 20%, stated that one of the main reasons to buy was that they wanted a home with a secondary suite for family or renting. 1/5 of people wanted a secondary suite. That's unexpected to me. This may be born out of necessity or culture, but comment below. I'm curious, would you want a house with a secondary suite in it? So guys, I think we're gonna end the video here. If you wanna stay tuned for the CMHC Mortgage Consumer Survey, be sure to like and subscribe this video. Like I said earlier, I'm gonna be putting out a series of videos breaking down this survey. If you found this interesting so far, there is a ton of information to come, so stay tuned.